Hi everyone, today let's talk about the PCE data, as well as all the data and the normal charts. Do me a quick favor and like and subscribe and hit the bell to help out the channel. So the PCE data came in at expectations and that was enough to spike markets. CPI and PPI came in much hotter than expectations previously, and that was definitely a little bit concerning going into this PCE data. And you can see the numbers month over month, 0.4, year over year, 2.8. So the monthly gain was 0.1 and the previous period was 2.9. So we're continuing to see good numbers there. Everything was pretty good overall. We did see personal income jump by 1%, well above the forecast of 0.3, which is a little bit interesting. But we did see spending decrease by 0.1 versus the estimate of 0.2. Overall, we did see services go up by 0.6 while goods fell by 0.2. Pretty interesting. Makes sense. We're headed back towards that service economy that we kind of lost during the COVID period. And then they highlight the bottom line is to get to that 2% number, which we're not quite to yet, but this was a good indicator and they continue to say it here. The worst fears were not met, so we did see a little bit of a spike on this data. We are headed towards that 2% goal, but it has been a little bit bumpy. Like I said, with those numbers previously on CPI as well as PPI, we did see hesitation from markets. Some pretty substantial dips that did get bought up, but with the inline data that we saw today, markets were positive. Getting into the normal data here, we have fear and greed finished at 79. You can see momentum, extreme greed. We saw strength step back into extreme greed. Breadth still trending up very, very slowly, but hovering in regular greed. Put call ratio still in the same extreme greed. Volatility did come back down to that SMA. Looks like it got below it here just by a few points. Nope, just above it barely. 13.4 versus 13.52, so still hovering just above the SMA. And then you can see both of the bond markets still sitting in extreme greed. And then moving over to seasonality, you can see the last trading day of the month was expected to be slightly bearish. We did not get that, obviously, with the PCE data. And then moving over to next week, you can see sideways choppy price action here for tomorrow as well as up until that Tuesday of next week. And then we see a slight decline into mid-month. We'll see if that comes to fruition or not, and then bullish price action into the second half of March. And then moving over here to the calendar, you can see it's kind of mixed signals here early in March. The first of the month is generally bullish, whereas that Monday's a little bit more bearish. And then you got mixed signals up until the 8th, expected to be quite bearish. And then if you looked at the election year data, you have the 15th of the month being the low point, which is that options expiration. And then as we get into the rest of the month, pretty bullish, headed into that April timeframe. Moving over to the economic data, you can see continuing jobless claims a little bit higher than expectations. PCE in line, everything was good there. Initial jobless claims a little bit higher than expectations. Previous number also revised up, not great there. You can see on this PCE data as well, the previous numbers were revised down, so inflation numbers going down on the previous read, also quite good. Chicago PMI missed, that's not great. Pending home sales also missed by a lot, not great there either. And then looking at the Fed balance sheet, sold off by about 15 billion or so. Pretty decent sell-off, not as crazy as the previous week, but it does continue to sell off week after week. Moving over to max pain, you can see it's all the way up to 501, so it has moved up a little bit. Still have that massive call wall here at 500. 500 to 508 seems like what we're going to get. We did finish generally at that level. Put call ratio went down a lot here, 1.28. Total options 1.35. These off weeks seem to be a little bit higher in the options than they have been recently, which does make sense. Options activity does tend to increase over time, but pretty interesting this call wall not mattering too much. And again, we'll take a look at next week's options on the Sunday video. Moving over to the charts, you can see that massive up candle, over 0.5% here on the SPY on the initial reaction plus the follow through on that first candle. Gave almost all of that back immediately on the first two candles of the day, and then ended up rallying into the mid session and end of the session, falling a little bit after hours, which is interesting, but everything overall was quite bullish. You can see that big wick rejection here on the big volume of the day, which was interesting. Still ended up as a doji, 0.36 to the upside. Momentum still zero. RSI still chopping right on top of that SMA. Let's look at that a little closer. You can see we've been chopping right above it, right around it here for a couple days in a row. No clear direction on that. And this does mark 6 days in a row in this same vicinity. No clear breakouts. I thought we might see a little bit more follow through headed towards that trend line sitting up around 515 just based on the price action, but we couldn't do it. You can see selling off after hours a little bit, so seems like we're still in consolidation. Moving over to the Tasty charts here for a moment. We haven't talked about these in a while, so let's hit them on the daily charts. You can see we're still hovering right at that 9 EMA on the Tasty charts. That is sitting at 505.04, and then we're still hitting that upper ATR band as resistance, currently sitting at 513.17. So that's the range that we're trading in. Touch that 9 ATR, touch that 9 EMA, pushing to that third ATR band. Saw a decent little pop in volume, and that was buying price action. This is the volume weighted MACD, and that started to roll towards the bull side. And you can see last time we got that here, it was a pretty solid push higher. Similarly here, as we saw spikes, this did end up going higher over time. So everything still looks a little bit bullish, but not a ton of room up to that resistance point. Moving over to the Qs, you can see we ended up closing above 438, so that's pretty strong. We haven't had any closes above that 438 level. You can see every time we've tested it, we ended up closing below it, except for now. We finally got a break above it, so that is quite bullish. On the daily close, we are falling after hours just like the SPY is, but the daily close looks very bullish, coming off that 9 EMA hold and then resistance up at 442. That is what I'm looking at. I don't know if we'll get there tomorrow. Certainly seems possible. But as long as 438 holds, everything should look quite bullish. Again, that price action was really choppy. Really strong first candle, 0.75. Follow through was 0.26, so 1% on the move. And then we ended up giving almost all of that back, coming all the way down to 435 and then rallying into the close. Pretty choppy session, surprisingly so. But we ended up getting follow through as I expected, just with a lot choppier price action in the mid session. So overall, everything still looks bullish here. Momentum ticking towards bullish, RSI ticking towards bullish. And then moving over to the Tasty charts, this is not quite as straight up as the SPY is, but we did get a nice pop off of that 9 EMA. The 9 EMA here on the Tasty charts seems to be a little bit tighter to the price action, so that's interesting. That's currently sitting at 435.85, and then the next ATR band is 442.80. That's right at that price range that I was talking about as resistance on the trend line, so that's interesting. Third ATR band here all the way up at 448. So that would give you quite a bit of upside, over 13 points of upside from current prices, a little bit less than 10 points of upside from current prices, or around 2% of a move. You can see the last time we had a substantial pullback, that was here in mid-February. That was off of that third ATR band. Previously, once we got into that range, still got a pullback. Didn't quite get there on this most recent chop, on this attempted spike higher. That was the NVDA earnings, and since then we've been chopping sideways, so that's interesting. We also saw a step down towards bullish on the volume weighted MACD, so we'll see if that has any follow through. Typically that's a pretty good indicator. You can see it here indicating a bottom, rally up to that third ATR band. Similarly here, bottoming third ATR band as a result. And if we start to see this roll to the bull side, that could be an indicator that we're going to push towards that 448 level. Moving over to the Russell and the Dow, very different story here. The Russell was only up 0.7, which is interesting. You can see that big wick. We ended up getting up to 206 and then fell all the way back down to 203.50 or so, and we're down a little bit more after hours. You can see that here on the hourly chart. Massive wick, almost hit my next resistance, pulled back well below 204.60, back into the middle of the range. Gave back all the gains at one point. Wick down to 201.88, and then we're holding back here in the middle of the range. So pretty interesting there. We'll see if this continues higher. It's still holding above that 21 EMA at 203.26. So that still looks okay, but definitely not as strong as it did coming off of the data point. And then the Dow basically did nothing, 0.01. Similar thesis, moved a little bit higher, fell back into the middle of the range. Momentum bearish, RSI still neutral there. Moving over to the Mag 7, I think this is really driving markets here. You can see we are at a critical resistance. We've hit this 5 days in a row now. 6 days really if you include that first peak here. So 6 days in a row touching that level. Momentum, it is slightly bullish, and we did see a step up on volume. If this breaks out here tomorrow, that could be quite bullish. Resistance is not for a long time in terms of trend resistance, so plenty of room if it breaks here. But right now, we are at resistance, still just barely below it. Up a little bit after hours, but nothing convincing. Moving over to Apple and Tesla, really no changes from yesterday's thesis. You can see Apple still fighting for its life at 179.69. If that area breaks, which at this point I expect it to, look at that massive volume spike we got on the day, and it still ended up bearish, so big bearish candle on the volume and selling on the day indicates this is probably going to move lower to me, in my opinion. And then looking at Tesla, tried to go higher, hit those same wicks, and then rejected back into the middle of the range. almost hit the 9 EMA, almost hit support. Still can't seem to get above this peak here from Friday the 16th. Moving over to Google and Netflix, following up on yesterday's video, you can see Google hit that 144 EMA and the level here at 138.21. It ended up holding there. So it held that level, gap to the level, and then rallied on the session. So that's pretty good. Momentum rolling towards bullish, volume stepping up here. Google is one of the few of the Mag 7 that's actually a little bit undervalued relative to its peers. And the 9 EMA is sitting up there at 141.61. Does seem like Google could find a little bit of legs back up into that 143.82 level. Right at that 21 EMA seems possible. Google definitely one of the few, like I said, with a little bit of undervalue, if you can even call it that. It's still relatively expensive to the whole market, but to its peers, it's relatively cheap. And then looking at Netflix, gapped higher, it's falling a little bit after hours. Still looking quite strong on the trend, looking for that 416 level. Moving over to Amazon and NVIDIA, you can see Amazon up 2% on the day, coming off of that trend line, bouncing strongly back above 174.28. Next level, 181.41, seems like it's headed there. It's even up a little bit after hours, so Amazon looking quite strong. And then NVIDIA positive on the day, 1.87%. It's up more after hours. AMD is driving markets in the semi space right now, and NVIDIA is definitely on the tail of that. Let's go ahead and look at that on the 4-hour chart. And you can see it here after hours, rallying up, looks strong. We'll see if it can get back up to that trend that's dictating the shorter term. That's all the way up at 873 at this point. It seems a long way away, but NVIDIA is super powerful. It could absolutely go there in just a day or two, especially if it breaches above these prices right here at 806. Moving over to staples and discretionaries, looks like we're seeing a bit of a risk on play here. Staples pulling back 0.16 right at the trend line, right at the 9 EMA. Momentum fading, RSI kind of neutral here. Volume big on that down move. And then you have discretionaries rocketing higher, 0.68, headed towards that 185.36 level. Seems like it's going to breach it at this point. It's well above this previous highs, breaking out to the next one. And then 189.39 is the next level to the upside. Discretionary showing strength, staples pulling back. Moving over to industrials and utilities, you can see industrials continues to hug that trend line. That's 6 days in a row now at that same level. Got very close here on the 22nd and then touched it. One day not touching it in the mid there on the 27th, and then we're right back to it, continuing to look strong. And then utilities, I've been following this one for a couple of days now, coming off of that 21 EMA hold. And then we did touch that next level here today, 62.59, pulled back a little bit from there. Could be an opportunity. First test typically fails, and then we'd see a push up to that 200 SMA at 63.10, and then above that I have 64.20. So utilities looking pretty strong here over the next couple days. Moving over to the breadth charts here on the 20 and 50-day averages. 20-day did wick a new high, did close at a new high as well here relative to recent price action. Continuing to find resistance from back here in December, but looks like we're going to head to that 86 level. And then looking at the 50, similar candle, bullish momentum, bullish RSI, wick that next level. First test failed a little bit. We'll see if we push to that 55 EMA at 75.14. Moving over to bonds, we did see the 2-year sell off more today. It sold off pretty strongly yesterday, and then today down a little bit more, and now we're in bearish momentum on the Friday candle. It is up a little bit, which is interesting, but it seems like we're probably going to hit that 21 EMA down around 4.8. And then looking at the 10-year, still hovering in the same range, in this same consolidation, still above the 21, bearish momentum, RSI kind of neutral here. It's above the 50 line, but below the SMA, so nothing super convincing, but it is still holding up fairly well in this 4.23 area. Moving over to the dollar, as you would suspect, it rocketed higher on the data, pulled back pretty quickly, and then ended up closing very strongly on the day. It looked strong yesterday. It did test that 200 again here today, momentum rolling towards bullish. I would expect the dollar to break higher, which should be a little bit weaker for equities, which is interesting considering we're seeing mostly bullish indicators, but the dollar definitely showing strength. I would expect it to push to 104.4 tomorrow or Monday. Moving over to bonds, J&K went a little bit higher. It's above that consolidation now, but still below the 94.82 level. Nothing super convincing. TLT, on the other hand, had a pretty strong jump, considering that the 10-year was only down a little bit, and it's still within its normal consolidation that it's been in for the last few days. So TLT, it's above the trend line. We've seen this before. It did gap higher and then gap down, so I'd be a little bit careful there. But this is definitely a breakout. It looks strong. It's still below VWAP, but momentum bullish, RSI bullish, big volume there, so makes sense. We also did see a little bit of Fed talk about 3 cuts this year. So that reinforced the idea of cuts coming. So that could be sending TLT a little bit higher on the day as well. So overall, TLT looks much more bullish here now that it's broken this downtrend line. Like I said, just hesitant because we had that 1 day previous. Moving over to volatility, move index broke the 21, so we're back down here. Still holding a slightly higher low, but nothing convincing. Momentum bearish, RSI bearish. And then looking at the VIX, gapped higher on the volatility, ended up closing lower at that 55 EMA, just below it by just a few points. And we did hit that trend line and then find a little bit of support. So nothing convincing in the same region. Didn't break out like I kind of thought that it would. And then the RSI looks bearish here as well. So again, looking back down to that 1275 level. Moving over to my accounts, I did make quite a few adjustments. I actually over adjusted on the day because it was such a whipsaw, so I didn't profit as much as I should have, which was a little bit upsetting. On a positive day like this, I definitely should have made more money, but I didn't, which was unfortunate. I did readjust into a pretty decent position for tomorrow, so we'll see how that plays out. But right now, I'm sitting on some 203s for tomorrow on the IWM, so looking at $1.45 potential there. That is down a little bit after hours, not by much, so still sitting on that same position. So 60 cents in the money, still have another 80 cents or so to go to the upside for a max profit there. And then looking at the Qs, I did roll up to 439 for tomorrow. Obviously, I paid a debit to do that, so that was not super great. But either way there, I should collect a little bit over $300 on that position. And then I sold a 68-cent put here at 437.50. Again, that was down a little bit after hours, but you can see it actually has popped up a little bit after hours now, so that's good to see. So that should be a little bit better for my positions tomorrow. And then I did roll out my strangle out to 424.78 for 50 days from now, and then 455 on the call side. Those are relatively unchanged, obviously, because they are so far out. And then TQQs, I did roll both of these out to next week, 57 on the call. So that puts my max profit up around 61. You can see that's $3.91 on that position. And then a 59 put for next week as well at 90 cents. So looking to profit about $1.50 on both of those positions together over the next week or so. Let me know down in the comment section what you thought of the PCE data or the choppiness that we saw across markets. Are we going higher, or was it just a spike and we're going to continue sideways? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.